I'm Cynthia Scott with Cynthia Scott Insurance Agency here in the great state of Georgia. We're talking about BYOB, and we're not talking about bring your own bottle. We're talking about being your own bank, setting your grandchild, setting your adopted child up for success, setting them up in the same banking system method that we've used for all of our lives. We are talking about setting that account up at different ages and the advantages of doing so. So not only we talked about this just a little bit, we talked about protecting their lives. Most children, they don't have life insurance until they get to a certain age. And sometimes that's 20s and 30s. Now, the mom may carry a little bit on them on the job, or grandmama may have a policy on them at the house, $10,000. But you have this 15-day-old baby that is insured immediately. As soon as underwriting is done, they're covered. Where you have the other one that they born the same, but they started late. This child has no insurance value. None. The 15-day-old that opened the life insurance is going to have an earlier early financial information stability. Wherein the one that just opened up his checking account because he started working down at the local grocery store part-time, and he needs an account so that he can get his deposit. He's just learning about checking, wherein the probability of this first child with the life insurance, with the cash growth, if the parent set this up for him or her, or the grandmother set this up for him or her, they have had conversations with this child for 18 years. The other one didn't have the conversation until he was 18. So now he's behind 8 ball. And we'll come up with so many excuses. The rich keep getting richer and the poor keeps getting poor. That's the kind of stuff you say when you see A and B, and A has leaps and bounds over B when you both started out at the same time. It's the information. Only experience. Only truth. So if you all see how this is setting up, you understand what I'm talking about. It's not about the demise. Heck, I can write a policy on myself tonight and I'm not thinking about a demise. Half of 100 years old and I'm not thinking about a demise. I'm thinking about reaching 100. I'm thinking about living 50 more plus years. Because when I think about why I'm doing it, that's the last thing on the list. I'm thinking, okay, how I set this up? How much can I put in this policy every month? Can't wait to build it up so I can take it out and buy another property. That's what I'm thinking about. While many thinking about demise and don't even want to insure your life for a wife that you've been married to for 30 years and she's not even valued $100,000. Don't even sound like $10,000 because you don't want to spend it on somebody else. Wrong mind. You have the baby A, right, who has a cash growth, a guaranteed cash growth with possible dividends. And then you have baby B with only the cash that they put in and no cash growth. We're talking about the two banking systems. Okay? And when we come to BYOB, I don't know why so many people, they want to think so deep about it. But check it out now. What you're doing is this. Just like you go, but we've been sold and told this stuff so much till we can't think no different. And it's really a shame because there's too much out here for you to be thinking the same way. Whenever you go to the bank, we only use the bank as a holding tool. That's the place where many of us think our money is the safest. Grandmama them thought the best place to put it was under the mattress. in the sock, dig a hole in a tin can and bury it. That's what grandmama them thought was the best place for their money. They didn't trust the banks, so they had to do something else. Either way, they're not getting any value. Rather, they put it in the hole in the ground or they put it in the bank. No value. Some of them say they try to build your relationship at the bank, but there is no value in your money. So rather you bury it or you put it in the bank, you coming up the same way. At least when grandmama them did it, they couldn't control their money. The banks couldn't because they didn't put it in there. And only God knows if they even wanted their money in there. I don't know. Okay? So when you think about that, it's only a tool that we use. That's it. So the tool is a bank account, or the tool, and the two tools that I'm talking about is either a bank account or a life insurance policy. Those are the only two. Those are the only two options that we're talking about. Okay? It just depends. Many will go the banking route, the traditional banking, because that's all you know. But what about if we showed you a way? But what about if we showed you a way that you can use the same setup that the banks use, but you choose you a different way, right? A different vehicle to hold your money. It just happened to be life insurance that allows you to do that. Just like many of us think that getting a relationship with the bank is going to guarantee you a loan. That's false. You've been misled. They gonna take your money unless you probably had a checking account with them that you just was bad and couldn't, I don't know, write bad checks or something. I don't know. So you're either gonna have your account set up through a bank, or you're gonna do it in a method of life insurance. Now, I bet on the life insurance, not because I'm a professional, not because I'm an insurance professional, but because it makes the most sense. Because while we're thinking we can build a relationship with a bank, oh, let me tell you this. I have the same checking account that I have right now. I had it when I was 18. Many of us bet on that because you have this long term with this bank that you can go and get a loan. And that's not true, because it's going to be your credit worthy. It ain't say nothing about the length of time that you have a checking account with us, we're going to give you a loan. That's not true. Many of us that makes direct deposits into those checking accounts can't even get a $500 loan. You cannot get a $500 loan, and you give them a deposit every week, every pay period, direct deposit. You give that money to them, and then they tell you can only get $250, $500 out every day. But now they just spread your money out to everybody else with a loan. Wherein if you follow baby A, where the parent started at 15 days old and started them a life insurance policy, now guess what? When mama gets paid, instead of mama putting the money in the credit union, mama is putting the money over here in the life insurance policy for this child. So instead of opening up that savings account where they're gonna take your money, loan it out, and get 100%, not 100, but nearly 100%, and I'm just being sarcastic, y'all. Because they've loaned the money out, your CDs and all that other stuff, they have loan the monies out, and they give you 0.01%, 0.00. They give you pennies a year when they've made thousands a year. But they only give you a percentage of it. And this is your bank. I bank with my bank. No, it's not your bank. It's not your bank. Your bank would be something that you can control. You can't even control the money that you put in there today. You withdraw 500, you got to wait to 12:01 tonight to get another 500. We're still talking about how to become your own banker. And we're talking about setting our children up for success. Starting our children out where we can utilize the tools, the same tools that the banks use. Banks invest their money into life insurance. Okay?